Culture eats strategy for breakfast. So pass the brown sauce, you're in for a good helping of culture today. Specifically, the importance of culture in high-performing teams or outperforming teams. I'm Richard Edgar, and this is Outperformance Matters, the podcast from Blue Whale Capital. Well, we're guided, as always, by Stephen Yu, the Chief Investment Officer of Blue Whale Capital. Welcome to you, Stephen.
Hi, Richard.
Hello there. Now, we're recording this in early December, when most people's thoughts turn to Christmas or whatever season people are celebrating. But investors, professional investors, are cut from a different cloth and are obsessed with talking about their outlooks, their forecasts for the coming year. And I would like to know, first of all, whether you create an outlook for 2026.
We don't, the short answer. The reason being is all about the shelf life of your forecast.
Well, plenty of people think that they are worth doing. I mean, all the big investment banks in America, for example, have given their forecasts for the S&P 500, the main index in the States, and they're confidently predicting it to grow through the coming year. So they think there's something worthwhile there.
I think to a certain extent, I'm sure predictions would worth something, but it's how you ended up utilizing it. So from our perspective, we do forecasts in terms of how much money we think our company is going to make in the next 3 to 5 years. But what I was referring to earlier about the shelf life is the shelf life only lasts for up to 3 months. The reason being is after 3 months, you get a new set of results if they report quarterly in terms of earnings, and then you need to reassess and also to recheck your numbers to see whether your investment thesis remain intact for the next rolling 3 to 5 years.
Right. So as the facts change, you reserve the right to change your outlook, your forecast.
And also at the same time, as we have been through this journey over the last few years, is no one had foreseen the pandemic coming back in 2020. At the same time, the Ukraine invasion at the time, which caused a lot of chaos in the commodities market and at the same time the inflation market. And then there's a lot other things that we have not actually come across. And hence,
black swans.
Correct. So hence, when you are taking a long-term view, meaning, let's say, for relating to the investment bank's forecast for the next 12 months, which is by December 2026, there's still a lot of things that could happen that we don't know about. So how good is the forecast? Would you actually make a decision to invest on the back of those forecasts and come back in a year's time? I think that will be quite imprudent.
So perhaps useful as a conversation starter, if nothing else. So you're not going to give us a forecast, but how are you feeling about 2026? We're getting close to the Christmas break. So what's your vibe check on the coming year?
So I would always consider myself as a long-term investor. But at the same time, I'm very cautious in terms of being cautiously optimistic about the delivery from my companies. But I think at the same time, you need to continue to reassess those investment theses. And hence, I think if you're asking me, would I expect my companies to deliver a very strong set of results, most of them in the next quarter or two, which would be in the first half of 2026, I think I would say I'm pretty comfortable. But it's just one of those things, like things would come out from the blue, the black swan event, or maybe the company got disrupted, and I think you just need to reassess continuously. So at this moment in time, I'm very happy.
But beware of the folly of forecasts. Now, high-performing teams, you know when you're in one, and you know when things just aren't working out, no matter how talented people in the team are. The secret is culture. And that applies in the field of investment, just as it does on a playing field or the field of war. And as unlikely as it seems, we're going to draw insight from all three now, because we're joined by Sam Herlihy, who works alongside Stephen at Blue Whale Capital. Welcome to you, Sam.
Hi, Richard.
And you're an investment analyst, I should add. What it doesn't say on your LinkedIn profile, though, is that before you moved to investment, you had a career as a professional footballer. Tell me about that.
Yeah, so finance is my second love, second to football. So I was lucky enough to play for the Australian under-19 schoolboy team and then finished school and then spent a year playing in a professional football team's under-19 academy.
So proper professional track there. And it's, investments gain came from the loss of football because you had an injury.
Yeah, so unfortunately I've had 2 screwed knees, multiple surgeries, and it was off to university and then into finance for me.
Business is littered with sporting analogies, and I don't like litter, so let's try and make these as concrete as we can. But what are the lessons for investing that you drew from that early career in football?
I think there's a lot of things. I think probably the first one is just discipline and hard work, and I think people talk about that across everything, but I think particularly as it goes from sport to investing, it's so important. And what I mean by that is just it's an everyday thing. It's not. I think probably when people watch sports players or something like that, they might watch the Olympics or they watch the game on the weekend and they just see that kind of bit. But what goes behind that is just consistency, stacking days on days on days, on months, on years. And in my opinion, I think investing is the exact same. You do runs, you look at companies, you do the hard work day in, day out, and then eventually you get the results. But it's one of those things where you can't just wake up and be a good investor. You have to spend the time, you have to spend the consistency, and that comes down to, I think, discipline and hard work.
What about teamwork? Because that's an interesting aspect within a sport like football. How does that translate to investing?
I think the key thing there is, and it's a saying, lots of people have said it before, but I think high performers attract high performers. And I think when I was playing football, there were certain mates that I had that I much preferred to train with, because I knew if I trained with them, the intensity would be higher, they would push me, I would be challenged, and I would get infinitely better versus, there were some other friends who may have been talented, but we kind of had a bit more fun and we mucked around and it was a bit more chill almost, but I just never got the same out of it. And I think investing is exactly the same in the sense that if you are around the right people, the expectation gets put up, the intensity gets put up, and the outcomes get put up. And you build a momentum and you find you just get better and better and better. So I think it is really, really important. And I think sometimes, they may not be your best friends that you want to train with, but that it's a better session or it's a better outcome if you do it.
That's quite a mature attitude to have had as a teenager, as an early adult. And is it that sort of maturity, that sort of awareness that you need to keep with you as you proceed through your career, also an investment?
Yeah, I think it's a hard one because I think it's just an intangible thing where there's that desire to kind of be at your edge, and you feel almost most alive when you're pushing it and you're kind of challenging yourself in that way. And I think some people don't like it. I think that's the reality, and they don't like being there. And other people kind of, I don't want to use the word addiction, but it's kind of like you almost don't feel like you're living unless you're at that stage where you are working really hard and you have that intensity to do it.
Stephen, I can see you nodding along there to that bit. Now, most of your work for both of you working in investment is pretty black and white. You've got numbers, you've got data, and they will spew out answers that are right or wrong and easier to understand. But this, as you said, Sam, is an intangible aspect. Is this the secret sauce of a good team, of having a culture like this?
Definitely, in terms of the culture, is one of those things that you do not see, or the hard work that had gone behind the scene. I think in our industry, investment ideas is easily copied. Like you can just copy someone else's ideas, but what you don't know is how they ended up with those ideas, and at the same time how they decide to buy and sell at the same time. And on the back of that, there's a lot of discipline, repeatability, and a culture in terms of how the team operates together.
And it's easy to talk about culture, but I want to understand how you instill a particular culture in a team like your own team. Now, Sam's got useful experience beyond investing in football. Not many people may necessarily know that you have experience in the army. Explain a little bit how, because the army has a way of instilling culture. So tell me first of all about your background in the army.
Yeah, so when I was quite young, I ended up joining the Reserve Army in the UK for about a couple of years. And I was part of this regiment, which was the 266 Parachute Battery that we operate a light gun as part of the artillery unit. And what was very interesting at the time was that the trainings or the discipline that we had in place was quite intense, I would say. And I think the learnings on the back of that is you really need to know your stuff, just because you are prepared to go into conflicts in time if you get called out. And I think it's a very good set of trainings and also the experience that.
It's the consistency in terms of going through the whole checkpoint and not, crossing your T's and dotting your I's. And it's the same with trading, it's the same with investing in terms of it's those things on the margin that, you've worked for 10 hours and there's one more thing you need to look at, but you're tired, so you don't look at it, you think it'll be okay, but it matters. And it's the same when when you're going through something like that, you're not going to skip a step. And you know that you have to do every step right. You know you have to do it well to a certain standard. And I think that translates once you get that experience and you get that learning into everything you do.
Yeah, so I can give you some examples like in our world, which is probably similar to when you're playing sports or maybe in the army. Obviously, in terms of the day-to-day, it's probably quite dull in terms of like you need to get your maybe accounting numbers correct. You need to build a financial model. You need to strip a white rifle or maybe clean the rifle and put it back together, or maybe do the exercise together as a team. But how you translate that in practice is, in terms of the financial market, it's all real-time basis, right? So that things could happen real-time, such as maybe the company would hold an investor day and they ended up disclosing very material numbers that could change the investment thesis. And I think as an investment team, you need to be able to operate real time to make a decision. I mean, the market is not going to wait for you for 24 hours, right? You haven't got the basics correct, and then you need to speak to a friend, or maybe you need to work together differently. Like, you need to actually make a sensible decision quite quickly and correctly.
To being ready, there is this military phrase with the 5 Ps or sometimes 6 Ps, proper preparation prevents poor performance. There is another P in there. But it's that aspect of being ready. Maybe that's the working 10 hours and doing your work.
I think it's one of those ones where like you can't afford to have a day off in a sense of like lowering your standards. And it's, again, I'll try not to go back to sport all the time, but it's the same thing in the sense that, if you're training every day, you're fighting for a position. You want to play, you're fighting for your thing, you're trying to progress. And it's the exact same with investing where, you can't afford to come in and take it easy and I'm not going to work hard today, or I'm stayed out last night, or I was on the pints or something like this. Like, that's not okay. You need to be there every single day, ready, because you don't know. You don't know what's going to happen.
Yeah. So once you've established a culture in a team, how do you retain it? How do you make sure that this is a consistent aspect that doesn't, just sort of fade away as you will get used to ways of working?
I think an important one is giving people the right amount of autonomy and the right amount of responsibility. And I think, again, it doesn't suit everyone. A lot of people say they want responsibility and say they want autonomy, but they don't. And when it comes to being accountable, that can be really, really challenging. But I think if you find the right person, that can be equally inspiring. And it actually what takes it from, where some people might view a job into a mission where they really put their heart and soul into it and inspires them to work harder and to achieve better things. And I think that is sometimes what people miss in terms of, and if you find the right person, they absolutely love it and they can't get enough of it.
And that aspect of autonomy, you've got to have the right people, Stephen. But when they exist, then how do you allow people to? How far do you allow people to go with the autonomy?
I think as much as we could allow them to do so, just because you always want to welcome new ideas and new perspective, and everyone is coming in with that different perspective. Yeah. But at the same time, you need to work closely together. And we, as you rightly said, I mean, we are on a mission. We're here to deliver very high performance. And if someone is coming in with a very, I don't know, maybe below average ideas, and then I think some of us might raise our hand to say that that's not good enough.
Well, you've got to earn the right. I think is what, like, you've got to earn the right to have that responsibility, and and that comes from in that example, if you're working an idea, it's making sure that when it comes to that and you're pitching and you're getting questions and you've done the work and you can point those things out and you can stand behind it. And I think you don't deserve the responsibility unless you're going to do that.
And how about bringing everybody together around one outcome? How does that work?
I think it's finding the right people that believe in a mission. And I think when they come together and they are high performers and they demand high performance, but you're all kind of heading in the same direction and you have this one goal that you're all working towards together, that allows you to have that bit where you are kind of challenging somebody but not attacking them in a sense. And then, you can say that, well, we're trying to get the best outcome here because the mission is actually greater than our own egos or our own kind of value. I think it's just getting the right people who understand that and believe in that, and then cultivating it over time.
Well, Sam, we better let you get back to your mission. Thank you very much indeed, Sam.
No problem. Thank you.
Okay, Stephen, it's now time for the Outperformance Matters myth-busting toolkit. So what is the investing myth that you would like to bust this time?
The myth is meeting management team adds values to your investment analysis.
Right, so let's just explain first of all, this is when investors like you get to talk and interview the CEO, the CFO of the big investee companies to find out more about their business, and that's meant to inform your investment thesis.
Correct.
And you don't think that's worthwhile?
So there's some nuances to it. If you're referring to the very large companies, not small companies, where information is abundant, which would be on the internet, industry trade reports, conferences, and lots of that, that's not a lot of value meeting the management team, just because in the context of regulation today, it's very difficult or almost impossible the management team would tell you anything that you couldn't find out yourself.
They've got to tell the market as a whole, otherwise it's insider dealing.
Correct.
I feel quite conflicted in this, though, because I've worked at a large investment house that has got one of the largest buy-side teams of analysts. They meet, there are about 14 or 15,000 management meetings every year, and lots of anecdotes of, where they say they can see the whites of a chief executive's eye. They know whether to trust them. They know they might get an inkling of the direction that the business is going to go in. So why do you still not think that that's worthwhile?
So just to clarify, though, I do meet management team. But the experience have told me that meeting management team in one shape or form would probably help you to have a few questions answered just because you couldn't piece the answers together yourself. But at the same time, it does comes with attachment, or you become friendly with the team that you end up speaking with quarters after they have delivered their results.
And they're probably being nice to you.
They are definitely very nice, lovely, amazing people. At the same time, then you end up not making the decision just based on objective facts. So in my experience over the last, let's say, 8 years or so, running a high conviction mandate, so you need to do a lot of work behind the scene before you make a decision. We still try to speak to the management team just to fill up some gaps that we couldn't piece together. I would say that just because we invest into very large companies, about 1/3 of them we never had interaction with. The other 2/3 we have some interaction with. But the issue that I have now, still quite undecided whether it's value adding or not value adding, was that within the 2/3 that we end up speaking with, about 50% of them, that was quite fruitful, that we actually got something out and we ended up making better decisions. But the other 50% of that it became value detracting. The reason being is, let's imagine if a company ended up not meeting expectation, had a profit warning, you speak to the management team, and then they would definitely tell you that this is a one-off phenomenon, there's some IT system, some contracts not being signed. And then you say, okay, that's a very nice reason. Maybe it's a one-off, it's not structural. You give them another quarter, and then they miss it again. And that would be another complete different set of answer. And then you keep dragging on, but a lot of data that you're looking at is probably not pointing in that direction, means in the opposite direction that you could have already decided to pull the trigger.
So better to have had a cool and detached relationship with that company, looking just at the data and deciding earlier to sell if there were a problem.
When I go back to the example, the remaining 1/3 of the portfolio that we never had interaction with, I would say based on the track record, we have made the most optimal decision.
They're the best ones. If you haven't met the chief executive or the CFO, then you get a better outcome.
The reason being, we have done this, probably covered these topics in our previous episode, is all about facts, data, and evidence. And you would force yourself or your team to work harder to get to the bottom of the answers, rather than you probably spend 30% of the effort to try to find the answer. You couldn't find the answer, and then you try to give them a call to say, oh, what is the right answer? And that sometimes it might not be the right answer.
It might lead you astray. Despite all that, is there one chief executive that you'd like to chat to that you've not met yet?
Yeah, so I would still love to have lunch or maybe dinner with Jensen Huang, and just because
of NVIDIA,
and just because I think he's extremely intelligent, I'm sure I would learn something. So if you're hearing Jensen, you should drop us a line.
Get in touch at producer@bluewhale.co.uk. You heard it here first, Jensen. Please drop us a line. At this stage in the show, we normally take listener questions, and please do keep them coming. But as it's Christmas, we thought we'd do something a little bit different and take feedback from Stephen's investors. Because you do get a steady flow of emails and letters, don't you?
I do. I welcome all of them, and so please do write in. I would say most of them are positive, so that's
good.
Pretty
That's
good.
What you want to hear. Jolly good. Okay, well, I've got one here, and it's from Phil, who writes, "My wife works as a radiographer, the often overlooked part of the NHS that aren't nurses or doctors. She was worried about her occupational pension, so I helped her start a SIP. She's probably one of the smallest investors in your fund, but she's seen phenomenal growth. Our worry now is that the investment makes up a third of her portfolio, but what a lovely problem to have." Well, that's nice to hear. And a second one here from John with a similar medical background. He says, "I've been investing in Blue Whale from almost the beginning. I am in my 70s. I worked as a qualified nurse for almost 50 years and managed to save partly because I didn't have many holidays. However, I'm now able to use some profits from your fund, and I went to Australia earlier this year to visit one of my sons, and next year I'm taking my daughter and disabled son to Vegas. Thanks to your fund, I'm able to do these activities." So that, Stephen, makes what you do seem very real, doesn't it?
So firstly, thank you very much, Phil and John, for writing in. I think that makes our job worthwhile to start with. And one thing that is sometimes difficult to work out is investment is intangible, but the outcomes to making a difference is tangible. So do keep writing in.
Well, a lovely note to end on, Stephen, and we're delighted by these positive outcomes, but I'm obliged to point out that capital is at risk, past performance is not a guide to the future, and that investors may lose money, particularly if they only stay invested for a short period. Happy Christmas from Compliance. But that's it for this episode. Thank you to Stephen Yu of Blue Whale Capital, and as you've heard, we love getting listener questions. Stephen will try to answer any questions about Outperformance Matters. Write to producer@bluewhale.co.uk. Thanks for listening, for watching, and if you enjoyed this, do tune in again and leave us a review on your favourite podcast platform. Remember, outperformance matters. Goodbye.
Please note that this podcast is issued for educational purposes only by Blue Whale Capital LLP, which is authorised and regulated by the Financial Conduct Authority. Views expressed on companies, markets, asset classes and investment strategies do not constitute investment recommendations and must not be viewed as such. Listeners should note that any views expressed may already have been acted upon, may no longer be current and may not be revised or updated. Nothing in the podcast should be viewed as comment on the suitability of any investment. If you are unsure of the suitability of any investment for your needs, or if you feel that you do not fully understand the risks of investing, you should obtain financial advice from a reputable professional financial advisor before proceeding. You are reminded that your capital is at risk. The value of investments could go down as well as up, so you may get back less than you invest. Tax treatment depends on personal circumstances and may change. This podcast is directed only at UK residents and does not constitute an offer or a solicitation in any jurisdiction.